let's say you cut it and it goes your direction later.
Yeah.
If you let that get to your head and you start beating yourself up, I mean, that's a disaster waiting to happen as well.
Yeah.
It's not what happened to me. Like that wasn't a. I don't know. That was a gift, but not the right type of gift. Like a gift from. It's like a gift from the devil wanting you to do that again.
Welcome back, everyone, to Be the Trader. Today is going to be a very special day because I have Chris and Evan Shunk back on the show. And if you're wondering who that is, then you need to go watch the previous episodes where we dive into their stories and how they became consistently profitable. But they're two brothers who have found their own style of trading through systematical trading. And we go really deep into that. But today we're going to be focused on some cool topics that a lot of traders are probably dealing with every single day. So Chris, Evan, thanks for being back, man.
It's great to be back.
I really appreciate it, man, because I know it takes some time out of your day, so I really appreciate that.
No, we're really happy to be here.
So let me ask you guys this, and feel free to speak freely, whoever wants to go first. But when you think of the word of, like, risk, what comes to mind first?
Probably me breaking my risk and not respecting it. Actually, a nightmare pops up to my mind is not respecting my risk. I still remember it was ACY.
Okay.
What was that? Was that 2020, 2021? You're on the phone with me. It was like a 1.3 mil float stock. I was only in like 2K shares. I mean, that's not that much for me.
Yeah.
But it just kept going up. It was one of those, like, I shorted it and I didn't respect the high day stop at the time.
Yes.
And it kept going. Like, it was started at, I was at short at like 12 and high day was 14, broke 14, and then it's at 20, and then it was at 30, and it got to 40. And I was like in such small size that, like, I was like, okay, I could wait. I'll give it some more room.
Yeah.
And the extra room ended up being another, like, giant minute candles going from like 20 to 30 and then 30 to 40, and then it was at 49. And my brother was just like, dude, what are you doing? I'm like, dude, I froze. I froze completely.
I remember being on the phone and he kind of was just like silent, like.
Oh yeah, I thought
were you down at the worst
I was
point?
down 49K at one point.
And it was tiny size.
I could have, accepted that loss. That would have been like a month worth of gains at the time.
Yeah.
But that would have been brutal, and like it could have kept going. It could have turned into a 100K loss.
Yeah.
It could have.
So like always, he got lucky.
What happened? Please don't tell me. What happened?
Dude, he'll break the worst rules and luck out. If I break a rule, I'm screwed.
I'm you. I'm you. And I think it's a blessing for us.
Yeah.
But it sucks too.
I know.
So I sat through it because I've seen it before. I know this thing's going to come back down. It's going to come back down hard. The risk is, though, can my account afford that upside of how much more it can go up? Because it could have gone to 100.
Absolutely.
And that
was all in one day.
Right. This is in one day. This is like in 5 minutes. Well, it was halting, so every 10 minutes, I guess. Right.
I bet your heart was just like, what's going on?
Yeah, but I knew it was coming back down, and that small size that I was in ended up being a 49K loss at the top. It was an Amex stock. What ended up happening was a pending news hold. And the pending news came, and the news was there was no news. And it came flying back down just a couple bucks above my entry as soon as the unhold, and I got out right away. Took a 5K loss, which is totally fine for me, and I was so relieved, and I shut my laptop, and I was like, I'm done. I'm done for the day.
Jesus, and then you probably
He
taking
was
the loss.
watching,
Yeah, I take it immediately.
Yeah. That's great. What about for you when you think of the word of risk?
I mean, it's sort of similar, like, just have a very set, I mean, if you're system trading, have a set risk and don't break it. And then, it's funny because the only time I've ever not respected a risk is a similar situation, which I am partial size. Because then you start seeing the psychology behind your risk. Like, if I'm in full size, I've never not respected a risk. But if I'm in partial size, I'm like, it's not that bad of a loss. Let me wait a little, and then I don't respect the risk, and it gets even worse usually. But
why hold it anyway? I'm just curious. Like, what's the thought behind?
It's gonna come back. I've seen it go past my risk 5 cents, and it come back. I've seen that happen.
Yeah, sure, 100%.
Having that thought of I'll just give it a little more room. I'll just give it a little more, and And then, oh, I'll just give it a little more. And then it's just like, oh, God.
Nah, just gonna give it some
Yeah,
more.
I learned a lot. I don't do that anymore. But
Yeah.
respecting your risk is, I guess, my thoughts to that. And if you don't respect it, it's just, if you keep not respecting it, it's just a matter of time until the market will eat you alive and an AC comes your way.
Yeah.
And then at that point, you'll be like, okay, fine, I'm going to forever respect my risk.
So
Yeah.
a good point is the reason of your risk is protecting yourself from the very rare, like, one time in which you blow up.
Yeah, because it only takes once.
Only takes once.
One
man.
time of not respecting your risk. And that.
And plenty of
Yeah.
times you'll get out at your risk, and then if you held, you would have made money. That happens plenty of times, but you're protecting from that one time.
Right.
100%. Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. Because at the end of the day, it's like a game of survival. You know, like
Yeah.
of keeping what you've made.
Yeah.
Survive to play it the next day.
That's
Do the
literally
same
what it is.
again.
Because if
Yeah.
not, and you let it get to your head, then you can, even if you don't take a, let's say you cut it and it goes your direction later.
Yeah.
If you let that get to your head and you start beating
Right.
yourself up, I
Oh.
mean, that's a disaster waiting to happen as
Yeah.
well.
Yeah.
It's not what happened to me. Like that wasn't a, I don't know. That was a gift, but not the right type of gift. Like a gift from. It's like a gift from the devil wanting you to do that again.
Yeah,
Yeah,
exactly.
yeah,
Yeah, it's like,
Yeah.
I got
yeah,
gifted from the devil.
Exactly.
Right?
Like
Yeah.
when you succeed because of a bad habit, that's
Right.
actually terrible.
Yeah.
it's terrible.
'Cause you're
And that happens to
rewarded.
lots of people.
Yeah.
Like, and it's so hard in trading that it's so hard to like really distinguish when you're new, like what was a bad win,
Yes.
what was a good win.
Yeah.
Yeah.
Right? Like you just don't know, like
Right.
until you experience
Right.
it, or until someone like your friend or says like, "Yo, like that right there,
Yeah.
like
And it gets your
9
ego.
times out of 10, you
Yeah.
probably should have lost."
Yeah. Yeah.
You got lucky.
Exactly.
today.
Yeah.
And you think you're like hot.
That's
And
what
you're
my
like,
mind-
Yeah,
Yeah.
yeah.
They think they're all doing great, and yeah.
Yep. Or you take a risky setup and
I'll catch
it
up to them
works for you
always.
that day, so
Yeah.
then the next day you see, you're like, take it again.
yeah.
You know,
exactly.
and I'm gonna take a bigger size today because yesterday it worked.
Yeah.
Yes.
And then it doesn't work.
Yeah.
Yep.
When it comes to just the idea of planning, what comes to mind first?
Data for being prepared. Data for sure.
Have the entire trade planned.
yeah.
What do you mean by that? Have the
The
entire
entrance,
trade
the stop, and the exit.
Yeah. Before every trade.
before you press that button.
Yes.
Yeah. Before you trade, you know your exit, your profit targets, your entries, your everything.
Because if you set the rule before you're in, then you're more likely to respect it when your emotions are high. If you don't set it, and if you start setting it while you're in the trade, then your emotions will start changing when you want to get out.
Because explain that. Like, what do you mean changing? Like, what's going to happen if you are making that decision while you're in the trade? Because a lot of people are doing that. Like, they'll say, I know where I want to get in here. And they
Yeah.
get in, and then they start making decisions like, well, I should probably get out here. Like, you know
you're
what I'm
more
saying?
likely to be manipulated because it happens to me all the time. I'll see a stock tanking. I'm like, it's going to zero, but that's exactly when it reverses. If I didn't have my rules, I would have been like, oh, it's going to zero, I should add.
Yeah.
Yep.
The market's it's wired. It's designed to prey on your emotions as a human. So you're not gonna do well trading emotionally and changing your plan up. Stick to your plan and keep to it. The moment you let something emotionally get to you, that's exactly what they want. It's exactly what the riggers want.
Well, speaking about emotions,
Yeah.
what about mental?
What do you mean?
Like your mental head game or your mindset and how you're thinking of yourself every day.
Right. Well, that's why the data helps.
Yeah.
So I mean, when you do system trading, you don't even have to worry about that if you just follow the rules. That's why it's nice.
But we're humans, right?
I
Like
know,
you still
I know.
get in your head, right? I mean,
Right.
from time to
Oh,
time,
yeah,
you
our
might
system,
you might either
yeah.
get a little too like prideful because you're killing it, or
Right.
maybe it's too little gun shy. I'm
Yeah.
sure at some point.
Oh, definitely, yeah.
So like, I'm just curious. Like, do you guys do anything that helps you clear your head?
Well, leaving the screen. Yeah.
Yeah, I mean, just I don't know. Keep
Just
healthy.
leaving the screen?
Yeah,
Yeah.
just
Yeah, no, I don't do any like rituals or anything.
Yeah.
When I feel bad, I do more data analysis. That's it.
yeah. Anytime I'm doing that, I just work harder.
If I think if I lose on a play that I
Yep.
typically like, I'm like, oh, should I keep doing this? And then I go look at the data, and then it tells me if I should
Right.
keep doing it. Yeah.
I like that. Okay,
Definitely.
so you're always referring back to the data,
Always.
right?
Yeah.
Yeah.
And that's something to the core of your strategy
Yeah.
to make sure that you have more. Speaking of that, confidence.
Yeah.
Yes.
Yeah.
That's where all my confidence comes from, and I stick to it strictly. I trust my data, and I have a lot of years back testing it, so it's pretty huge sample size. So
100%. And
yeah.
but when it comes to confidence, like, do you feel like I feel like a lot of people don't really dive into that thought of like confidence, like how important it is to your trading,
Yeah.
because you can have the best setup in the world,
Mm-hmm.
and I think we've talked about this on probably both of your episodes when we're interviewing you independently, that you might trade I might trade next to you, for example, and not do nearly as well.
Yeah.
Right.
Totally.
But that's because I don't have any confidence, right, in
Totally.
your style.
Yeah.
You can be following someone's system. You can be following someone's system, but you might not execute it perfectly if you don't believe in it that much. So
Right.
you'll cover too early or get out
Yeah.
too early.
You gotta
Get
build
half
your own.
size when he got full,
Yeah, yeah,
a quarter and he
yeah.
got
Exactly.
full, like,
Yeah.
and you're like, what's going on?
Yeah.
And then that leads into like,
Doubt. You can't have doubt in your plan.
Yeah.
You have to build it, and you got to trust it, confidence, all in it.
what about sharing? Like sharing your ideas with other people, like between each other. Like, do you try to? Here's my idea. I'm gonna just trade, and I'll talk to my brother later or my friend later about it. Or are you like more of a trader who can like talk about it with another trader while you're in the trade and still execute perfectly? You know what I'm saying?
We can still talk about it. We
Okay,
talk
cool.
all
If
the
it's
time.
system.
Yeah.
There was
If
a
it's
point.
together, you mean? Because they are kind of trade similar, or do you mean like with anyone?
I could talk trades with anyone. Yeah. I mean, I could.
Cool. I have that weakness. I was curious.
Oh yeah, I've always like, talk. I do it. I don't really talk in chat rooms that much, but there's some people on Twitter I'll talk to.
Yeah.
And we'll share ideas and stuff we're doing, and
Cool.
stuff like that.
Yourself?
Yeah. I mean, with the system trading, I mean, we can talk. We talk about it all the time. But there was a point when we were doing discretionary trading where I was noticing that being on the phone with people or talking to people would make me get in my head and not follow my plan. But the system is a plan already, so you can just talk about it and it's easy to execute. But
Yeah.
discretionary trading, I don't want to listen to what I won't read chat rooms. I won't look at anything
Yeah.
because it will affect me in the heat of the moment.
Hard stops.
Keep them. They're great. Set your stop and walk away.
Yeah.
I do that sometimes.
Absolutely. Same
Yeah.
boat?
Yeah.
What about people who think like hard stops? I don't want to do that because someone's gonna seek for my hard stop and stop me out.
That I
We
get
think
paranoid
about that.
depending on my size. If my size
Yeah.
is really big, I don't really like having a hard stop there. Maybe I'm just paranoid, but
Mental hard stop always.
mental hard stop.
But
always.
if it's big size, we'll set alerts.
so we can get
coming
out
up.
manually.
Yeah.
Just like as soon as it hit it, I'll hit a market order right away. Just
Gotcha.
I'm out. Hit my thing. Done now.
And you don't break that.
No, not anymore.
And let,
Yeah. When it comes to full size, as you mentioned
Right,
earlier.
yes. I mean,
'Cause if you
we're
break
not supposed
that-
to.
Yeah.
Yeah, it's that actually that happened to me really recently on LIXT. I think that was
Okay.
just within this month. My worst slippage of my career yet. You know how like when the volume gets so volatile and there's so much volume pumping through and routes sometimes stop working. That happened, and the only thing that works is a market order.
Yes.
I've learned this mistake before. This is the last time I ever had to learn it because I'm not going to make this mistake again. But I'm doing ARCA, I'm doing NASDAQ, I'm doing EDXG.
nothing's executing.
Nothing's working. I'm like, what? And I'm in huge size, and it's going up against me hard.
And you're trying to get out.
And I'm trying to get
Oh,
out
that
right
makes it
away.
worse. You know that feeling?
I was doing it right. I was executing. I respected my risk.
I know.
And then it went 50 cents higher, and I'm just like, market, and finally got me out. I'm like, oh my gosh, I forgot that I need to do market when it gets that volatile and routes aren't working. So now I'm just always doing market for my stops. So just no matter what, I'm just
Yeah, I'm just getting out.
Yeah.
The scariest thing, which we've talked about before, is when it halts before your stop and then gaps up over it.
Oh yeah, that
Yeah.
sucks. You can't do. I mean, if that happens, that's just part of it. That's just part of the
There
game.
was one. I think it was Neuro, N-U-R-O. You
Yep.
remember that one?
Yep, I do. I traded that one.
Oh, that one got us.
And sometimes you can catch it right before it, right? If
Yeah.
you can, sometimes you can gauge it. You can say, oh, this one's gonna halt.
Yeah.
Like you can start to ease out, but
Yeah.
I've been stuck where it like halts and then it gaps up more.
I know.
You're just like, my rule says I gotta cut, but I know it's gonna
I
pull
know.
back. You know, you're like,
Yeah.
but you just gotta cut,
I
and
know.
then you gotta live to fight another day.
Yeah.
Mm-hmm.
That's so important
Neuro got us. Yeah.
because if not, you wouldn't be here.
No, yeah. Oh, yeah. I cut
Yeah.
and went higher.
I mean, we looked once. I think it was 2020. If we had no stops, we would have actually made more money than with our stops. But
Right.
at one point, it would have the stock that would have destroyed us ended up coming back down all the way, which is really interesting to think about. But
That was a weird year too. Though.
I know.
Well, no, there was one stock that wouldn't have. There's no way it would have had a bankroll. It was SPY.
Right,
SPY. There was one stock that
Spy, SPI.
SPI.
Okay,
Yes.
okay.
That was the one thing. Regardless of our bankroll, we couldn't have lasted that. It went,
Right. Yeah. No. Unless you had, like, if you had
Yeah,
infinite
but
bankroll.
even to last through it, you're just saying theory. Like, okay,
Yeah,
I was
yeah.
saying like that'd be the
theory.
worst
No,
heartache.
because stops. This is the whole thing. Like, it goes past your stop and comes back down. The data says you would have made more money with no stops because that happened so often.
Right.
But the stop is there to prevent you from it going so high you get
You
margin
can't
called.
withstand it.
Right.
Yeah.
Because there's no way anyone could withstand SPI with that big of a bankroll. There's no way. I mean, it went from 3 to 70 that day, I think.
Jesus.
Yeah.
I do remember that ticker.
Yeah.
And that's why I was like SPI. That's why I definitely remember that. And that was a monster. And it's what's amazing is that these things have been happening forever. Like they've just been like we'll always have those runners like out of the blue.
Yeah.
But I feel like it's like happening more often and then more extreme now. Like I feel like than back in the day.
Oh yeah.
Like and when I say back in the day, like prior 2020.
Right.
Right? That's something that's definitely changed overall. And I think volume is something that we kind of talked about. I don't know whether it was off camera, but how the volume has changed. Like, has that interfered or have you guys made adjustments with your data because of the volume? Like, have you seen changes or do you pay attention to that? Like, is that super important for y'all?
We haven't seen much. I mean, yes, the volume has increased for sure, but when it comes to our patterns, we haven't noticed that much of a difference. There's more plays now, basically because there's more people in the market, I guess. But when it comes to actual like a volume analysis, we don't really. I found it's kind of random. I felt volume's a pretty random indicator. I know people swear by
Sure.
what is it, the volume forecast. I checked it over and over. I can't find something truly consistent with the volume forecast. I don't know what they're looking. I've tried putting time with it. Maybe I just haven't figured it out.
Sure.
But from what I've seen, I've found volume being a fairly random indicator in the sense how we use it.
Gotcha.
Volume is king when it comes to how much supply is in there and how strong that stock is going to be. But when using volume forecast stuff like that, I haven't found much there.
When it comes to just the idea of position sizing, like what comes to mind?
Well, now it's Kelly criterion.
Kelly criterion.
Can you go into depth on that?
I'll have you do that because
it weighs in several different factors, but the biggest takeaway. So when I first started implementing it, I wasn't fully implementing Kelly. I just implemented a basic version of it, which really anyone can do. But the biggest takeaway from it that sort of changed the way we size is risking a portion of our bankroll per trade. So say I have a 100K bankroll, and then I make some money, so now I'm at 110K. My next trade is going to be, say I'm doing 10% of my bankroll. So our size fluctuates with the size of the bankroll. And that changed everything for us for a couple reasons. The first was we now should theoretically never get to zero because as you go down, you're sizing down and it's completely fluid. Yep. And also it makes the growth exponential because we used to just do a sort of same size for a long time and then size up and then do that same size. But when you size up, because if you're playing a system that has 70-80% win rate, you're sizing up so dramatically that the growth is a lot more.
That's interesting. I love that you guys brought that up, because I've heard of that criteria before.
Yeah.
And when did you start implementing that?
Really this year, right? Yeah. About this year.
I like the idea that it helps you in drawdown moments, but it also helps you in the growth.
Yes.
Right.
So when you're hot, you're going at it.
Yeah.
Yeah.
And when you're not, you're kind of slowing down.
Because he was talking about ride or die in that first interview, which it really was, because we knew that we didn't have a size down mechanism. So like if we kept getting these max losses, we're gonna hit zero.
Yeah, we didn't at that time. We didn't. We're still pretty early, right?
Yeah, I remember that. And can you familiarize the audience who maybe didn't see that? Like, what was that moment? You said whenever. What was that?
Oh, in 2021, there was a month span of gappers where you were just getting wrecked. Like we were taking max losses every other day, almost sometimes 2 days in a row. There was a few week periods where it was just awful to short gappers. They're just all of them were squeezing, and our account took a heavy hit, a really heavy hit, and we had to make a decision of do we size down or do we just keep going? We know always in the long run it's better just to keep going, but
at this time we'd been conditioned to never size down because we knew that you take a loss, you're probably going to start taking wins more. So you don't want to size down and then take a smaller size win. That was our philosophy.
Every type of heavy period, you could see it in the data.
Which is smart. I mean, that makes sense.
Any heavy periods of a lot of losses tend to be followed by big wins coming.
But then, like, you don't know when those losses are going to end. So if you don't size down, you're going to blow up.
Exactly.
Yeah.
Explain that. The whole idea of just the randomness, even though you have a probability standpoint, because you still could lose 3 in a row.
Yeah,
right.
Even if you have 70%, whatever your win rate is.
It could have been another 2 weeks of losing for all we knew.
Right.
Yeah.
But a lot of people hear traders say I have a 50% win rate, a 30, a 90, and they just think the win rate's important. But I don't think a lot of people talk about how that still doesn't mean that you won't go through losses, through drawdowns, through periods sometimes, where maybe months, maybe weeks. It depends on it just depends, but it's gonna happen, right? And that happens to you guys, and you guys are consistent, and you are systematic,
right?
But it still happens to everyone, whether we're discretionary or not. I think that's important.
Oh yeah, absolutely.
Yeah.
Now, when it comes to the idea of adding setups, are you guys open to that? Like, always look to add.
I found a new one this year.
Okay,
yeah,
cool.
It was I call it the spike row.
The spike row?
Yeah,
that's what he named it.
That's what I named it.
Cool. Just help me out. I understand.
It's a gapper that spikes.
Okay.
And then I'm taking the macro view of these spike rows and entries and exits for them.
So theoretically, on our chart, it might look like a discretionary trade, but it's actually 2 different plays. So depending on the gap, he might be shorting in his normal spot, but then he might be shorting more later, which isn't related to that first short at all. They're 2 separate plays.
Oh, okay.
Yeah.
Okay. So you'll do 2 separate plays in the same account, or 2 different accounts then, to make sure.
Same account.
Okay.
Same account. It's a parabolic move.
Okay.
We finally learned how to objectively, through our friend Calvin, to measure a parabolic move through Polygon.
Okay.
And like the stock has to do at least like a 15-20% spike in a certain amount of time, and then that would define our specific thing we're looking for. And we'll use trade ideas to alert us and stuff
cool,
like that.
Cool, man. And you brought up y'all's friend Calvin,
Yeah.
who's helping y'all get really into the idea of coding and finding and looking back testing and so forth, which is really
great teamwork. It's been awesome, yeah.
I was going to ask y'all on the topic of just finding someone to help you do those sort of things. Is that necessary for like a new trader, or do you feel like that's something, a different part of your career? What do you think?
And you don't need coding. I mean, sure, that's a big edge, and you'll have a lot of access to good market data quicker.
Yeah.
So by all means, that's a fantastic edge and a skill to work on. But look, I started tracking everything manually on paper. I wasn't even using Excel. I was jotting everything down on paper. Chris would watch. He'd come into my room. He's like, "Dude, what are you doing? I have all these papers out everywhere. Every ticker,
I put everything in Excel.
I'm marking their price, the open, everything's on favor, and I still, was able to do it. So,
and there's resources out there. I mean like I know Spike Heat was one of them. I used to use that.
You can backtest on them or pulling data.
Pull data. It's not amazing, but I think it's good. It's
but for
fine.
someone who's trying to learn, they could easily do
manual
that.
tracking is always the most accurate.
Yes.
Even Polygon.
You mean like forward tracking?
Manual, on the day.
Okay.
Train everything
Gotcha.
manually. Is always going to be the most accurate form of data collection.
You just mean actually physically doing
like
it.
put it in your
Excel.
Excel.
You don't have to write.
Excel's fine. Just type it in.
Just use your own eyes on your own charts.
Gotcha.
Write the open, write the close.
Write the float, the
it
market
gives you
cap.
more confidence.
Yeah.
Because you're there every day and you're seeing that.
Yes.
Because every now I've seen Polygon sometimes would be some inaccuracies. It's just what comes through doing it through a computer.
A few cents, but it can add
It's not
up.
a big, There's not many. Polygon I found is the most accurate, is doing a coding Polygon. But manual is still always the most accurate. So we always like to check it. We're doing it manually. Yeah. Most things, not everything.
Do y'all journal, do y'all do any mental journaling or anything like that? Like something besides just trade journal? Just curious. Like, would that help you with your journaling?
No, I've never. Did you do that? I never did that.
Do you do a physical journal though for like every day, just for trades in general, or just mainly like tracking data?
Tracking data.
Okay.
Yeah.
I was just curious. What about the idea of like risk management, like ideas that you guys implement to protect you from you?
We used to do really wide stops. We've narrowed them.
Yeah.
Explain what you mean. We used to do really wide stops.
I like the odds of like a stock going this far against you.
Yeah.
What's the probability of that? And maybe just withstanding some upside of it going against, withstanding the pain of it going against you and it coming back down, and how far. What's the probability level that something can go against you and come back down, and how often does that happen?
And you were basically trying to build confidence at that point, like having the more of a wider stop to withstand that. And
we were wrong basically, because the wider stop gives you a higher win rate. Because if you have a tight stop, it's going to go here very often.
Right.
If you have a wide stop, it can go here and then you can win.
Right.
So it gives you a higher win rate, but that
100%.
doesn't necessarily mean it's going to grow your bankroll more.
Right. Wider stops give you a higher win rate for sure, because the odds of that going that far against you are pretty low.
Right.
So if you size it accordingly for that, you're fine. But we found that if you decrease your stop, your profits will actually compound more because you're in bigger size, because your stops are less.
But you may take more losses, right?
Yes, but your win rate
more
won't be as big.
fakes or whatever.
You'll take more max losses.
Yes, max.
Yes.
Wait, what's a max loss to you guys? Define that. Like, do you mean like you're cut for the day? What do you mean max loss?
My max loss is like how much I was willing to lose on that day. So
on
every
that
day,
day or
no,
that
it's on the
trade?
trade.
on the trade.
Okay,
Every
so
trade I'm willing to lose,
call it 1R.
15% of my bankroll
Okay.
on every trade, pretty much.
Okay.
And so a max loss would be 15% of my bankroll.
Yep. And so, for that trade.
Yeah, for that trade.
Or for the day.
Trade.
Okay,
Trade.
cool.
Every
I just
trade.
was curious.
Yeah.
Because some people hear max loss, and like the way I use max loss is, maybe I risk 1R per trade, which is 1R is whatever R is for you, right?
Yeah.
And then if I lose 6R or 4R, I'm cut for the day, because I can't make more than that in a day usually.
Right.
You know what I'm saying? So that's how I kind of define it. So I was just curious on when you use the term max loss, what that meant.
Yeah.
So, do you guys find yourselves being able to kind of like pull each other back when things are getting rough for one or the other? Like, do you ever find that happening?
I think we do it naturally,
Or pushing each other to grow? You know what I'm saying? Like, or the other way?
it's just like if he's doing a new play, it's like if he finds something new and it looks like it works, I'll do it. Or if I'm doing something that doesn't really look like it's not working that well and he confirms, it doesn't look like it's not working that well, maybe I'll stop doing it.
Mm-hmm.
And then sometimes, we'll disagree. Like, he might like something, and I just like, I'd rather have a little more data. Or
Is there times where currently right now
Yeah, maybe
there's some setups that y'all both trade that y'all don't trade the same, like to get like
There's
maybe
not-
you know what I'm saying. I'm trying to
In
get
the
this
beginning
out.
of the year, I was doing like 3 or 4 different things in addition, but now I've kind of cut those back, and we're basically doing the same thing.
Yeah, now.
I'll do some other things smaller size maybe.
Who's the
Yeah.
one who like are y'all both testing just random setups on your
He's been
own?
doing it. I've
Or-
been actually not doing anything for the last like 2 months. He's been carrying the load, but we've gone in and out
Yeah.
throughout this time.
Yeah.
Like there's been periods of which is nice. There's never both of us doing nothing.
Yeah,
That's never happened. Yeah, that's
thank
great.
God.
Yeah.
One of us needs to do something. Otherwise,
Yeah.
Yeah.
But he got super motivated because once
Yeah.
we got this Polygon stuff going on.
Oh
it's
yeah,
like,
I
got
haven't
excited
stopped
about
this
that.
whole
That's
year.
cool.
Past
Yeah.
five months now, I've been hammering away.
I've just been
With Calvin.
making TikToks
Yeah.
doing no data for like 2 months.
having a good time.
Yeah, he's going back. to
But the
his
market's so slow. It's just
Yeah.
like I don't know.
Right. What you know? Speaking of that, cycles like market cycles. How has that been for you guys? Like when
I guess I don't know. The
I
market.
mean, you just deal with whatever comes.
You just do whatever comes. It just always changes, and I just withstand it. I hate the slowdown. The slowdown has been really annoying.
are there days that you don't trade at all?
Yeah.
Oh,
a lot.
yeah.
The
Really?
past 2 weeks, I don't think. I mean, besides my
I think I've taken
discretionary
one
little
trade.
gambles of 100 shares,
Yeah.
Yeah.
I've lost like $100 every week. It's like
Yeah.
it's just doing something stupid.
I mean, but it's like it doesn't necessarily matter. Like in the beginning of the year, I was on record to the best year of my life, and I probably had half or a quarter the amount of trades I typically do.
Oh, okay.
So it doesn't necessarily mean you'll make less money necessarily.
True.
But,
In
yeah.
fact, you might lose more.
Exactly. Yeah.
You might because you kept.
I mean, if you have 10 trades in a volatile market and like 7 of them are successful, you can make just as much money as like 3 trades and they're all successful.
Yeah.
That's true.
This year has shown me just how quickly, just how data really it can change, and just how the market, your patterns can change, and you need to adapt and quick. This year has shown me that the most. I mean, 2021 showed me, and this year's really showed me that I need to stay on top, and I need more of a foundational, at least 4 years of it consistently surviving every market. That's been my new approach, instead of just 2020's never coming back. 2021's never coming back.
When you're speaking of change, like do you guys plan on changing or trying to change your setup now? Are you trying
Yeah,
to do
all
anything
the time.
different?
Oh yeah, I did. I've changed all my patterns this year. Everything's changed to where if they haven't been working consistently from at least 2018,
I mean,
I've been throwing them aside.
it's been changing the entire time, and our risk has changed constantly for the last 2 years.
Yeah.
Things change all the time,
Our risks change all the time.
and sizing has changed a bunch, and small differences in criteria change.
Well, before, I know you guys didn't really focus on downsizing back in the day, right?
Yeah.
It was all one size or make sure you always lose this, or whatever it may be. And then you went to the Kelly criteria, right? And that's increasing and decreasing size.
Right.
But what about the trader who currently maybe just always downsizes whenever they're in a rough spot and then tries to increase when they're doing well? Back on the idea of how you guys didn't want to downsize because the data shows that
Yeah.
you're kind of messing up
Well, it's the
yourself.
data. They have to have the data.
Yeah.
Okay. So because I was gonna say, like, what are your thoughts to that trader who is like downsizing when things are getting rough? Because now you're kind of doing that with the Kelly criteria.
Right.
Maybe not dramatic.
Only
right?
do it
'Cause
if your
it's-
data says it works. It might not work for every system, and it's probably weird to do for discretionary. I wouldn't actually recommend it at all for discretionary. But if you have a data sheet,
What are you not recommending?
Kelly,
Gotcha.
because I think your emotions
Right.
are too.
Kelly criterion is very
Involved.
systemic based.
Yeah. If you have a data set that says it works, then do it. But no, just because we do it doesn't mean someone should. It just depends on how they trade.
Yeah, I appreciate that. I was just curious about that idea because there's different traders out there who trade differently.
Right.
And so you just never know just the thought of why you changed it to this, and if it makes sense for someone else, maybe think that way.
Right.
Yeah.
But
But if you're in slumps in discretionary, it's good to size down, I think.
Yeah,
Definitely.
I think so.
Yeah,
I mean, I do
Absolutely.
personally.
You gotta size down if you're in a slump.
Right,
Yeah.
but I do see the point, and I do 100% because it does happen. I'll size down, and then the next day the trade that I should have taken full size
I know.
happens.
I know.
Right.
And then you might get into that cycle what we talked about in your episode, which is challenging, man. It can be really challenging.
I'm a big advocate of not letting the losses get to you and refreshing every day. A lot of people, maybe you need to size down, but for a systemic trader, I've learned for me that every day is a new day, and don't let the previous big loss the next day, that previous max loss, affect your trading the next day. Don't let it size you down, because now you're going to size down on probably one of the best trades. I mean, maybe.
What was that trade where everyone lost a bunch of money and everyone was terrified of it the next day, and of course that's when
I do know what you're talking about.
The INDO, always the...
And then just just decimated.
And I knew someone that didn't trade it the next day because they had been devastated the day before, and it's like, no, this is when you're devastated. That's probably the
that's when the
true.
shorts are in
those
max
setups.
pain.
Yeah, on those setups.
Yeah, when max pain for shorts, you usually indicate the top.
We should start short.
Yeah.
And it's the trick is not being the front side. That's the trick for a lot of people because, like you said, like you'll take that loss and then skip out.
Yes.
And if you just wait. There's plenty of room on the downside for those plays, 100%.
Mm-hmm.
Now, before I wrap this up, I'm just very curious, if you guys had a choice to give up day trading and just swing trade or do something different in the trading sphere, like, you're a day trader, you're doing well, that's great. But is that the goal for you? Like, or did you really want to become an investor in the future? Or do you really want to take this to swing trading and having a different lifestyle? Like, I'm just curious where you guys, or do you want to stay day trader?
It's pretty free. Our life, we figured it out that we really only need the first hour and a half. Really, the most important is the first 10 minutes of the market. We really just need the first 10 minutes. But our other plays the new patterns I found, we need until the first hour and a half. So for California time, until 8 o'clock. Once it's 8 o'clock, we're done.
Whatever makes the most money, basically.
Yeah.
And if you make the most money and have the most free time, that's odd.
Yeah.
If swing trading would make more money than this, then I would do that. But
so
I don't know.
Are you ever dabbling in other things like that, like swing trading or anything?
We long some investment stuff.
Yeah, but we're done by 8 o'clock every morning, Pacific time, and then we have our long term. I just started a long term portfolio. That's getting crushed right now.
I think everyone is.
I bought the dip, bought a little too soon. It's all right.
Yeah.
It's
hey, when people are panicking,
Yeah,
that's when you should probably look into it. So, look, man, Evan, Chris, I appreciate you guys so much for being on the show today. It means a lot. I know a lot of people are going to have probably questions. They might want to follow you. So, if you can just say real quick, where they can find you, I'd really appreciate that.
Yep. Find me on Twitter, eShunk8, or Instagram, Evan Shunk.
Find me on Twitter, Chris_Sunk, SUNK.
Awesome. Well, look, guys, I appreciate it so much. It was a pleasure having you on the show.
All right, thank you so much. Great to be here.